right, it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever the world you're watching from, it's Business Morning live on Channels Television. Great to have you join us. Let's take a look at what's in the news. Checking out the oil market now. We see oil prices recovered today from a steep drop in the previous session, supported by tight oil supply and peak summer consumption after a U.S. rate hike sparked fears of slower economic growth and less fuel demand. Brent crude futures rose 77 cents to $119 a barrel in early trade, while U.S. West Texas Intermediate crude climbed up to $116.33 a barrel. Prices slipped more than 2% overnight after the Federal Reserve raised interest rates by 0.75 of a percentage point. That's the biggest hike since 1994. The dollar index retreated from a 20-year high, easing downward pressure on oil prices. Stronger greenback makes U.S. dollar-priced oil more expensive for holders of other currencies, actually curtailing demand. Investors remain focused on tight supplies and robust demand as Western sanctions restricted access to Russian oil. And Dangote Cement PLC has declared a dividend of 364.4 billion naira, 20 naira per share for the year ended 2021. These figures were announced by the chairman, board of directors, Mr. Aliko Dangote, at its 13th annual general meeting held at the Eco Hotels and Suites, Lagos. In 2021, the company achieved another financial performance with a double-digit growth across board. Do take a listen.
The Dangote Cement flag flies conspicuously at the venue of its annual general meeting in Lagos.
Director. Next to him is Mr. Olakunle.
Inside, the board of directors, regulators, auditors and shareholders begin the 13th edition, while others join virtually. The company experienced a year of strong growth, which, according to its chairman, could be attributed to the increased government expenditure on infrastructure and network of expansion around Africa. In the year under review, the company's overall financial performance stood at 684.4 billion naira, that's 43.2%, with a profit after tax of 364.4 billion naira. This informed the board to recommend a 25% increase in dividend at 20 naira per share.
So this year is totally a different ballgame. The inflation this year is much higher than last year, but I think things will improve as we go along. Good thing that we should expect us trying to meet demands of the product that we produce, and also at the best available, price.
The company's increased sale revenue, among others, resulted in improved margins. The group managing director says they intend to sustain the momentum.
The needs for cement, for infrastructure, housing, it is what it is, and we'll do our best to contain costs. We have seen 2021 results were, let's say, very good, and we're building 2022 on the same trend.
With all resolutions passed at the meeting, a representative of the shareholders explains that they're happy with the company's performance and the dividend declared.
It's a good company, and there's a lot of demand for cement, and they are in 10 African countries. So the diversification is very good for us, and you can see that they have very good corporate governance. For the first time, we have a female director, bringing the percentage of women to 27%.
With several milestones made in the year end 2021, it appears to be a good one for Dangote Cement PLC, and the board and management remain optimistic for the future.
All right, now to our first conversation. Well, OPEC's monthly report for May showed that Nigeria's oil production reduced by 195,000 barrels per day to 1.02 million barrels per day in May from 1.22 million barrels in April, based on direct communication. Well, let's get the implications of all of this. Join us now to talk about this and other issues in the oil and gas market. We have Temitope Kolade, Senior Manager, Oil, Gas and Power at Anderson. Join us right here in the studio, in our Abuja studio. Great to have you.
Good morning, Ladi.
Morning. So, with Nigeria has lost the position as Africa's biggest oil producer, and quite a dramatic turn there, making headlines yesterday. What does this mean to you?
Well, for me, I think it's in the coming. Over time, we found that that was going to happen, particularly because Nigeria has not dealt with the issues, the fundamental issues. Uh, Investment is nothing to write home about when you look at what's happening within the oil and gas sector. And the endemic issues with respect to vandalism, oil theft are still very much there with us. Insecurity is very prevalent. And so you find that investors are not looking the way of Nigeria. And going by the fact that there is so much theft, it continues to decline. And we've not even been able to meet the OPEC quota. And what we're now seeing, it's even quite shocking that we're losing our first place to Angola. It's unfortunate, but again, it's back to the issues that we have that we've not dealt with. And I think it's in the coming, until we deal with those issues, we might have it difficult this way.
Right, and I remember Angola did have their own issues before now, but they were able to surmount that and still keep producing. But do you think this trend, will continue? And what do you think can be done to actually reverse it, if any?
Well, indeed, I think that if you really do a deep dive at it, you'll find that Angola wasn't really the best of it as well. As a matter of fact, there was a decline of about $20,000 barrels per day in the last month that we're looking at, because this is just the report coming from May. Right. So I don't think that really our competitor should be Angola. I think we should compete with ourselves as Nigeria, and say to ourselves that what exactly can we, what are the issues again? Like I've mentioned earlier, we're not having investment within the sector. And again, if you look at the fact that currently we're not looking at even dealing with economic issues for the most part, we are preparing for elections, and it appears that nothing much is being done with our economy, right? It means that we really need to wake up and deal with the issues. If we want any reversal of the trend, we need to deal with the issue of insecurity largely, because that's very important. The other thing that investors are complaining about is the fact that there is so much theft, they can't account for all that they produce as well in terms of getting them sold, right? So these are the issues that we're dealing with, and I think the only way we can reverse the trend is for us to deal with those issues, and decisively at that.
Right, and you did mention investment, not coming into that segment. But does this not help, with that net zero transition we've all been clamoring for?
When we're not even where we're meant to be. If you look at other countries, Kuwait, Saudi Arabia, they've been doing well in the past years, and they're even doing better now, right? If you look at the report very clearly, about 7 countries did very well in terms of increasing their production as against other countries like Nigeria that are having, and Libya having decline in production. Right, so I don't think we're there yet. We're not even at that stage where we have, and this is where we also have issues with diesel across the world. We have the Ukraine, Russia crisis affecting us, where the world is really demanding oil from other sources. I think this is that time where we need to tap into the opportunities that are within the oil and gas space and ensure that we pump out the oil. The truth is that every government really focuses on the oil resource, typically to ensure that they maximize the benefit, because it's a time-bound resource. At some point, you might not be able to have it anymore. As much as we think about transition, we even need to do more of the oil exploration so that we can have the investment and we can have the funds, the capital funds, to invest into the transition. And that would be that we are transiting maybe into gas as a transition fuel first, and then going into renewables and other sources of power and energy for us. So I think largely we need to explore what we have at the moment. And if you take a cue from other countries that are already doing well, they are trying to do better. They're not slowing down. And that's where I think we should be looking at as Nigeria.
And talking about other countries, crude oil output increased mainly in Saudi Arabia, the UAE, and Kuwait, while production in Libya, Nigeria, Iraq, Gabon, Iran all declined. What can we learn from Saudi Arabia or say, Aramco?
Okay, like I mentioned earlier, clearly Saudi Arabia, Saudi Aramco is doing much better. And what they've committed to, for instance, in 2022 is to ensure that there is more capital expenditure into that sector for them, right? If you look at it very well, Saudi Arabia in itself is like the world's largest exporter of oil, is the most profitable, is one of the world's most profitable company. And what it's doing with that profit is that is also reinvesting it, not just into the sector, but into diversifying from the sector as well. So if there is anything we need to learn at all, I think number one is to realize that we need investment in the sector. At this point, even the IOCs are leaving Nigeria, and that's not a good indication for us at all. We need to deal with the issue of investment very clearly, because that's what Saudi Aramco is trying to do. All of the profits that he has, that he had in previous years, as much as he's paying dividends, is also seeking to reinvest those funds by raising capital expenditure. And that's the way to move forward, right? And to really have the investment. Unfortunately, if you look at Nigeria very quickly, as government, we do not have the funds to invest, right? Then how do we ensure that we have other people who have those funds to come and invest? Is for us to fix our issues, the insecurity issues, the issues with theft of the oil products, and every other thing around that. That's the way to have the private sector really come into the private sector come into the sector and come and put in funds for us, and then we can begin to see better performance.
Right, and another issue making headlines. We saw the UK court ruled against Nigeria in the $1.7 billion JP Morgan case. Was this expected?
Yeah, for me, I think it's long in the coming. We check very well. In October 2019, the U.S. Department of Justice had ruled that they found no case of corruption in that deal. In April 2020, similarly, the U.S. SEC, the Security and Exchange Commission, also investigated the deal and closed it, saying that they didn't have an issue with it. In March 2021, an Italian court investigated the case as well and closed the deal. So it's long in the coming. And my view, my personal view, though, is that Nigeria should not seek to delegate its regulatory priorities, its regulatory duties to other people, to other agencies. Why are we going to be saying that JP Morgan should have exercised caution where there are other government functionaries and government offices that were connected to the deal and could have stalled the deal, even indeed they saw it in a bad light? For me, I think that we just need to focus on governance, focus on the real issues that are affecting us, focus on how we ensure that our institutions are working, and we don't blame third parties for whatever issues that we have.
We don't blame third parties for somewhat enabling, I guess. But we know that Europe now, they've been doing all they can to reduce their reliance on Russian gas. And I see that Nigeria sold about 656 billion naira in the first 3 months of 2022. That's for gas, accounting for about 9.24% share of the total exports. That's actually a 14% increase from 573.8 billion realized for Q4 2021. Would you say we're keen into that shortage gradually?
There is a lot of demand for oil and gas, right? But I have not done a very great research on looking at what led into that. But one thing I can tell you for a fact is that the cost has increased, the cost of delivery has increased, the price have increased. So what we are seeing is, for me, the value increasing in terms of cash value. But in terms of the real output, I don't think that so much has changed. Again, because we have the issues with production still affecting us, right? And so Not essentially more investments into gas. As much as we have some new investments into gas, we've not seen the outputs yet. So as far as I'm concerned, I don't think that we have tapped into that deal because we still have the issues that are with us. And largely what we need to do is to check very well that what we are seeing as value is just the increment in price that has translated into more value for us rather than more production in reality.
So we still need to ramp up production to take full advantage of all of this price action the way other countries are. But now, back here, we're seeing indications that the price of diesel, we've seen marketers actually projecting about 1,500 naira per liter. And we're seeing about 75% of filling stations out of business. Do you see this 1.5 number actually hitting?
Well, I think that the suppliers association have spoken, and that's the way they see things. I won't dispute it, especially because of the reasons they also availed. And first thing we need to realize is that Europe in itself gets about half of its diesel from Russia, and we know that, that Europe has also tried to cut off its supply from, I mean, its demand from Russia, right? So that in itself is putting some pressure on how much you're able to import. Again, we don't refine in country, so we have to import. Number two is that we need Forex to do this, and we're using so much of our Forex to subsidize the supply of PMS in itself. So that again is another issue. And because diesel is deregulated, right, the marketers need to find Forex at every means to get it. So the landing cost is an issue. Then getting it, transporting it from the depot to other places is an issue. When you look at Lagos, for instance, you might not be seeing issues with scarcity of PMS and all of that, or shutdown of fuel stations, basically because the ports are in Lagos, right? But beyond that is, if you're now taking it from one place to the other, you need diesel. We don't have railways to even transport these commodities from one point to the other. So we rely heavily on diesel, and the spiral effect it's having in the entire economy, it's something else that we need to think about. So I think indeed that the country has to step up to the issues and deal with it very fast. Unfortunately, some of the issues they don't have mid-term or short-term solutions. They are long-term solutions. But as much as we can deploy the short-term solutions, we need to deal with it so that the projections of the suppliers association will not come true.
Right. Well, that would be great if it doesn't. But looking at the market now, the oil and gas market, we see the volatility there has played into, rising costs of energy globally. But take, for instance, the volatility ends in that market and, prices maybe stabilize below $100 per barrel. Do you think here in Nigeria we would see, reduced energy costs?
Reduced energy costs, not exactly. Again, because we import. We import the products largely. Maybe if you look at energy costs from the angle of power, we would say we're not solely dependent on gas-fired turbines for our power production. So maybe there will be some sort of equilibrium there. But if you look at energy costs from the angle of petroleum product in itself and all, nothing is really going to happen to us in terms of making things better for us. And the reason is because, again, we don't have the refineries. Whatever we sell, we have to still buy, and the products that we need from outside the country. And again, we still have the Forex issues dealing with us in the country. So I don't see the energy cost reducing, even if we have the price of a barrel of oil reducing over time.
Quite interesting. Well, thank you so much, Temitope Kolade, Senior Manager, Oil, Gas and Power at Anderson. It was great having you on the program.
Thanks, Ladi, for having me.
All right, now, so after the break, commodities market update is next. We'll have that in a moment. To stay with us, this is Business Morning. All right, now for the commodity market update, we see the U.S. Fed made a bumper move yesterday to rein in inflation. Rates up about 75 basis points, larger than expected. And back here in Nigeria, inflation rate for May hit 17.71%. Let's drill down on this and other issues with Longi Dafoe, analyst, financial derivatives company. Great to have you, Longi.
Good morning, great to be here.
Yeah, so 75 basis points, that was, most analysts were expecting that. But some still, expected that 50 basis points.
Yeah.
But now we're seeing the 75 basis points. Is this the hike that peaks inflation in the U.S.?
Well,
Is this that number?
I'd say it's too early to say,
Right.
but definitely, like you said, it was sort of expected, at least following what happened with U.S. inflation last week. Came in at about 8.6%, highest in the last 40 years or so. And
Getting to that double digits slowly.
Getting to double digits, exactly. And the recent move by the Fed to raise interest rates by 75 basis points, I believe this was the largest single increase by the Fed since 1994, thereabouts. So yeah, it's a very aggressive move from the Fed, and it really shows that inflation is a serious problem that they're really trying to tackle. Yeah.
Right, and we saw the markets actually reacted quite,
Markets actually reacted on excess. So what you typically expect when the Fed, when any monetary policy authority raises interest rates is markets should react in the opposite way. So
Yeah,
stocks should fall.
Yeah.
But then what we saw actually was stocks rising. So the reason behind this was typically during the Fed meeting, so Fed Chairman Jerome Powell actually signaled that there shouldn't be as much of an aggressive move by the Fed following this 75 basis points hike. So the Fed has signaled that it won't be using much more of an aggressive policy stance. It will still be aggressive, but not as aggressive as analysts and companies had initially priced in. So that's what we're currently seeing the market reacting to, the fact that, going forward, the Fed will not be as aggressive as we had expected. So yeah, markets went up after that.
But we've seen this happen before, the day after, the Fed raises rates maybe by 50 basis points last time. We see the markets react positively, but after, we still see them drop again. We've seen that happen with, the Dow Jones Industrial Average, the NASDAQ, and also Bitcoin, all impacted.
Yeah.
So right now, these stocks are not out of the woods yet. I don't believe they are.
No, this year generally has been pretty bad for investing in general. Stocks are down, like you said, Bitcoin is down. Everywhere is red, to put it mildly. So yeah, they aren't out of the woods yet. And as inflation continues to rise, we are still more than likely going to see. So it's not certain yet whether the Fed might or might not still choose to be more aggressive or not. So that is definitely going to play a factor in the long run in terms of how these stocks perform. Yeah.
Right. And how does this 75 basis point, how does it impact emerging economies? We know borrowing cost, with the loans and all of that, that's gonna be a more of a burden.
Yeah, borrowing costs definitely, and then also the value of the dollar. So once interest rates rise, we will expect the dollar will strengthen as well. And what this will do is it will increase the value of the dollar relative to other currencies. So currencies like the Naira, for example, will weaken against the dollar. And what this will cause is, so the dollar is the currency of the world, essentially. So most commodities are priced in the dollar. So once the dollar increases in value, we will more than likely see the prices of these dollar price commodities increase as well. So consumers holding a foreign currency will find it more expensive to purchase these commodities and so on. And this will, of course, add to issues of imported inflation, the exchange rate pass-through effect, and so on. Yeah.
So that means we can still expect the dollar index run to continue, because
Definitely.
we saw it did hit, a new high last time, but it started pulling back, but we could see it
we
spike
will
again.
more than likely see it spike again, especially if the Fed decides to engage in more excessive, aggressive tightening. Yeah.
So looking at that forex market now, what do you think the forex traders are doing right now? Are they stocking up on more dollars, or what are they doing?
I'd say definitely the dollar is king right now. So looking at the forex market, we can't expect the dollar to continue its bull run through the course of this year. So it's definitely something that we are already seeing. We're already seeing people starting to stock up on dollars. We're already seeing emerging market currencies fall. Look at the Naira. I believe the Japanese yen is also trading at its lowest level against the dollar in Yeah, so yeah, we are seeing it play out in the forex market.
Right, and back here now we see the inflation for May. It's about
7.1,
17.71, and your forecast was about
17.72. So
17.72.
we were
So
right
you were
on the
quite,
money. Yeah, we were right on the money. So I mean, what is driving inflation in the current right now? So at least similar to what we saw last month. So inflation did increase across both the food and non-food baskets. So of course, what is driving this is, of course, what we're seeing happening globally in terms of commodity price disruptions, supply chain disruptions, and so on. But then most especially, to put in more specific terms, the price of wheat. So wheat has gone up astronomically. And of course, we know wheat is used in manufacturing flour, which is used in bread, which is a staple food. That's what it has typically been affecting the food basket. Then for the non-food basket, the main conspirator there is diesel. So diesel prices are up, about 300% or so in the last year, trading at about 800 naira or so, so astronomically high. Of course, diesel costs factor into almost everything in the country. They factor into generators that businesses use to power. They factor into electricity. They factor into transportation and logistics costs. So the rise that we're seeing in diesel is truly affecting the whole economy. Yeah.
And we have that grim projection there of 1,500 naira per liter. That would be incredible.
It would be very, very, very detrimental, to put it mildly. But I mean, we're not there. So I mean, there might still be hope that we do not get to that point. But then it is definitely something that is on the table.
And I keep asking myself, how do we not get there?
Surefire way boost domestic. We don't have refinery capacity in Nigeria, so that is typically one of the major reasons that has allowed us to become extremely sensitive to international oil price fluctuations, so on, which is of course affecting the price of diesel. The fact that we're continually dependent on the import of these fuel products. So yeah, definitely trying to boost domestic production.
All right, looking at this latest inflation rate now, how do you think this would impact the MPC decision come July?
So one thing that is important to know is that monetary authorities, first off, are more concerned with inflation. So inflation is their priority as opposed to economic growth. So we are more than likely going to see the MPC prioritize fighting off inflation, more than likely to the detriment of economic growth. So it sort of comes down at the end of the day to a balancing act between monetary tightening and economic loosening. So we are more than likely going to see the MPC raise interest rates at its next meeting in order to curtail inflation. And this will be in trend with what we are seeing globally as well. US, as we know, has increased interest rates. UK, the Bank of England has raised rates at 4 of its last consecutive meetings.
And there's an expectation.
There's an expectation of another rate hike as well. Yeah. And even the ECB, European Central Bank, will be raising rates for the first time since 2011 at its next meeting. So yeah, the whole world, the trend is towards monetary tightening, and the MPC will more than likely follow this trend.
What if with all of this tightening, inflation doesn't go down? What next?
Stagflation. It's a pretty mildly, because what we are going to see with the increased tightening is that the economy will more than likely start to slow down. And once you have a situation of a slowing economy and rising inflation, this of course leads to the fear or the concern of stagflation. So we are more than likely going to see stagflation play out if things do not resolve well. Yeah.
Right. And let's look at the oil market now. What's pushing sentiment there at this point?
So sentiment in the oil market right now is actually moving due to issues of tight supply. As we know, supply is still tight, and of course also increased demand. So prospects of increased demand. We know COVID restrictions in China have sort of been coming down, so this is pushing up demand. So more of a combination of a tight supply and demand. So.
And we saw LNG prices crash unexpectedly, at the export terminal shut down. That made headlines yesterday. Yeah. I saw gas prices actually trending down. What else is, what are your expectations for gas prices?
So, like you
rightfully... We know Putin is, making bank there.
Yeah, they're definitely making bank. So, like you said, the explosion that happened at the Freeport terminal yesterday in Texas has sort of pushed. So the U.S. is one of the largest demanders of gas. So the explosion sort of wiped out about 2% of U.S. gas demand at a go. So the U.S. is currently oversupplied with gas. So that should continue to weigh down gas prices into the near term, I believe for at least the next 90 days before the facility can get back up and running. So yeah, we are more than likely going to see that factor into gas prices into the near term. And of course, the issues currently ongoing between Russia, Ukraine, and of course the whole EU gas and ban things. So those are definitely going to factor into gas prices.
Yeah, the Russia-Ukraine war still stays with us at this point. And I see the prices of cocoa is actually rising. How does that, what's stoking the price, and how does that impact Nigeria?
So price of cocoa are rising. So we are currently seeing an increased demand for cocoa, and this is good for the country because we are a exporter of cocoa. Cocoa is one of our largest export commodities. So increased demand mainly due to reduction of COVID-19 curves. So as we know, more people are going out, so there's more demand for confectionaries, more demand for cocoa products, and so on. So this is what we're really seeing pushing up the price of cocoa, the sort of build up in demand that we are currently seeing. Yeah.
Right, quite interesting. What else is happening with domestic commodity price movement?
Domestic commodity price movements, I believe we've covered everything. Yeah.
No, that's talking about Gary. I see that rice is actually down. Gary stayed on change. We're seeing tomatoes, pepper, onions, cement actually trending up. At this point, what's pushing sentiment there?
So definitely issues regarding logistics. So as we know, like we've already mentioned, so most of the trucks that deliver goods and supply and make up the supply chain logistics chain across the country are diesel powered. So the fact that we are seeing an increase in these transportation costs are actually factoring into the increase in the prices of these commodities. Also, the planting season effect. As you know, we're right in the middle of the planting season, and this is still sort of affecting the prices of commodities that we're currently seeing. Yeah.
And looking at the equities market yesterday, we saw another major pullback, and the banking sector again was hit hard yesterday. How are you seeing that market?
So I think the main thing there is going to more than likely be what will affect this market going forward, of course, inflation and interest rates. As we know, once the CBN at its next meeting more than likely raises rates, this should sort of provide a boon to banking industry because they will be able to take advantage of the rate increase to boost their interest income and of course their net interest income as well.
But we're still seeing a lot of sell-offs with banking stocks, especially with tier 1 banks.
Yeah, so apart from the boon to interest income and so on, so they are also currently experiencing higher operating costs. So we know banks like First Bank also has decided to close down or reduce the amount of time that some branches stay open just due to excessive diesel costs. So these are higher diesel costs, these are higher operating costs that the banks are currently enduring, are eating into their profit margins and so on. So this is sort of affecting the performance that we're seeing in these banks, and investors are pricing this into their decision whether or not to
I'm wondering when investors will start taking position, in most of those stocks to see if we'll see some kind of bullish run. At some point. Anyway, Longi, thank you so much. I guess we've covered everything in the commodities market. Well, we'll see you again next week. That was a good one. Thank you so
very
much.
Yeah.
All right, now we'll take a moment. When we come back, Business Morning returns. All right, now let's head on to the markets. We have Ini standing by right there with all the details. Ini, again, the banking stocks. Saw that counted down about over 2% yesterday.
Yeah, but not just the banking stocks. MTN Nigeria is a major driver of the market. Yesterday, it went down also more than 2%. So that also contributed to that negative sentiment in the market at the NGX yesterday. Well, let's look at the details now, Ladi. We see that the Osha index was down 0.16%. Equities cap was at 28.634. And then we see that, even though the activity chart was positive as at yesterday, we see that there was a lot of negative movements that we did see at the market yesterday. Wonder if those predictions by some economists that well, the bank is actually paying the price for some of the political movement that we see. Well, I wonder if that's what's going on. But we did see that the market has been on the negative. Ladi, the unlisted market also was down yesterday, more than 1%. Market cap also was about 1 trillion naira. There we see that there were 12 deals as at yesterday. Ladi, it's going to be a short one for the market today.
Yeah, I was seeing that. Not much. The market is not looking very interesting right now. We're seeing all of those.
I bet you that the crypto market is also not looking that.
No market is safe, at this point in here. And I'm wondering where the safe haven is. Maybe commodities? Because we've seen commodities actually have a good run, but we don't know if that run is going to continue.
There'll always be consumption because people will survive and all that.
Right. It's all about inflation right now. Risk off at this point. All right, Annie, thank you so much. Let's take a look at other markets now. We see the Bitcoin and the crypto market still in extreme fear. 7 points over 100. That's not been seen in a while, and we're seeing 7 points this morning. Market cap still below the $1 trillion mark, $938.71 billion for the market cap. That's up by 4.19%. And we see the volume traded in the total crypto space up 25.8%. Bitcoin dominance. Check out that slide now. We see Bitcoin dominance there, 44.37%. Bitcoin did spike below that 21,000 level. Last traded at this price. That was the month of December 2020. A lot happening in that market now. We see volume traded for Bitcoin there, $50.69 billion. Let's look at the price of Ethereum there. $1,176. That's up 4.46%. Volume traded $34.68 billion. We see the bulls manning that $1,000 support there for Ethereum. Top odds by market cap, we see BNB there up 5.17%. Cardano, one of the biggest movers there, up 9.44%. All right, let's bring in Gilbert Jopata now, digital market analyst. Hello, Gilbert.
Yeah, good morning, Mr. Ladi.
Morning, Gilbert. So I see ARK Invest are not as bearish as other asset managers. While everyone's complaining about, Bitcoin's dance with the stock market, they're saying there's opportunity. What do you see?
I also see opportunity as well in cryptocurrency. There is more upside potential because people are beginning to see beyond the current market phase and see what is more to come. And the Fed also increasing interest rates is also helping people also see through what is happening in the current macroeconomic trend, because presently they have just increased the cost of borrowing, making it more expensive simultaneously with an increase in interest rates. On the other hand, there's quantitative tightening, which was offloading their assets off their balance sheets, which is literally the Fed's crashing assets just to maintain the territorial integrity of the dollar. On the other hand, they are also overextending their monetary policy to other currencies of the world, because we also know that the dollar is a reserve currency of the world. But the question is, how long will this continue? Because if they continue this way, they are either going to send us into a recession or possibly a stagflation. And the election is forthcoming, and the present administration would not like to go to the poll with this state of the market. So despite them thinking that this may continue, the question is, I don't see the Fed continuing an increase in interest rates.
And, with this 75 basis points increase, we're seeing, Bitcoin still quite stable with most of the altcoins. But do you think this would last?
I think we are near bottom. This does not mean that we will not have a little more down. For now, crypto and growth stock have been a major beneficiary of of low interest rates. But the high interest rates, you know what happens on risks on an environment, assets like this go down. But at this point, we are beginning to see through what is happening at the global macroeconomic scene. And also mainstream adoption is going to be another major driver to maintain prices of cryptocurrencies.
Right, and you know, before this drawdowns, we saw play to earn tokens were doing pretty well. DeFi has not really had much action in the market. But with this bear market, what trend do you think is sort of coming up at this point in the crypto space?
Presently, I have not seen any major trend come up. Literally, what is taking over the market is the need to hold Bitcoin because during periods like this, mainstream institutional investors always like to go into assets that are more solid and battle tested. So moments like this, the best place to hedge or the best place to be invested in is always in Bitcoin and other major large market cap cryptocurrencies. Until after capitulation, it will be a little bit more. You're taking more risks to invest into assets that are not a solid asset like Bitcoin and any other mainstream or large market cap cryptocurrencies.
And talking about hedging at this point, we know what's happening with stable coins. We saw what happened with Luna there. Are we still okay with stable coins like USDT, BUSD? Do you see pressure, coming on those stable coins? Because this is the time you need some stability in your portfolio.
Okay, yes, I think this is making users of the market or those who don't necessarily come into the market for a speculative purpose, people who really have uses or real value of this asset begin to have a rethink. So the fact that you have a stable currency does not mean that it's truly stable because most of these cryptos have always been algorithm-based stable cryptocurrencies. These are something we have always talked about, but when you go through them through experience, you will learn to understand that this person was not just wish talking or talking because he has theory, but it's necessary. With this, people will have to pay attention to somebody who have an opposing view. I remember we have talked before now of stable currencies that have a 1:1 ratio, which means for every one stable currency, like one USDT or one USDC, there is a reserve dollar backing it. And most of these cryptocurrencies like USDC is regulated. More attention now is being turned into stable currencies that are backed by 1:1 ratio, and also those that are regulated. On the other hand, algorithm-based stable currency may not survive the future of cryptocurrency because investors are now snake bite careful. They want to make sure whatever they are using as stable currency actually have a certain level of stability with it.
Eggs actually hold with most of those stable coins that are still surviving at this point. Thank you so much, Gilbert.
Yeah, thank you, Mr. Ladi.
All right, now let's head on to London. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Well, America's central bank, the Fed, have announced the largest rate hike since 1994. And today, the Bank of England are going to decide. I guess we all know what to expect there.
We do know what to expect, Laddie. Good morning, especially after the extraordinary hike by the US Federal Reserve last night. I think pressure is really mounting on the 12 Monetary Policy Committee strong membership to hike interest rates. But it does appear to be a lose-lose situation. Interest rates have been risen 4 times in a row by the Bank of England to try and curb the soaring cost of living crisis in the UK. We know that inflation is currently at 9%. But if interest rates are raised for a 5th time later today, then this has a knock-on effect on mortgages. Now, we know that there are millions of people across the UK that are currently not on fixed rate mortgages. So if interest rates are risen by 25 basis points, then what they're paying every month is likely to go up by hundreds and hundreds of pounds. There are also a minority community in the UK that believe that central bankers shouldn't get too involved. I was just listening to your earlier guest discussing that this could potentially lead to a recession, and those are the fears that are staring the Chancellor and the Treasury in the UK right in the face. How are we going to sort this solution out? I suppose we'll just have to wait and see what Andrew Bailey and the rest of them say when they meet at 12 o'clock.
Yeah, we're looking out for that decision. Well, another issue now, the UK's financial watchdog has warned UK lenders to provide, more support for customers who are struggling with, soaring living costs at this point. It's been called the year of the squeeze. But what are you hearing? What is the regulator saying at this time?
Yeah, well, this is an interesting development. And the FCA, the Financial Conduct Authority, have written to about 3,500 lenders in a kind of Dear CEO letter, basically saying that they should be a little bit more careful when they're dealing with vulnerable customers. Again, as you said, we are in the year of the squeeze. Things are likely to get worse because we know that in the autumn period, energy bills are set to be increased yet again. Some people could be paying more than £2,500 a year to heat their homes. It does get pretty cold in the winter, I can tell you. I'm quite sweaty at the moment, laddie, because it is very, very hot in London at the moment. We're going through a heat wave, so people are not heating their homes, but they are using electricity because we have to have fans on right now. But a lot of people are struggling with crippling debt. During the pandemic, the FCA did step in. They asked lenders to be a little bit more cautious about how they are trying to attract some of that money. And again, they've doubled down on that statement, saying to lenders that, look, people are going through a really serious time. Rather than sending the bailiffs on the door to take their goods, you need to kind of address your language and try and create some stable instalment plans, put them in place so that people can pay their debt, also pay their bills, and try to live in a situation that is pretty crippling, I would say, for millions of people living in Britain at the moment.
Right, and with all of this, do you have any direction for the markets right now? Like, what's the sentiment looking like going into intraday?
Well, going into intraday, I think investors are pretty cautious, quite weary. I think just before I looked in, the FTSE all-share was trading down. The British pound is also trading down against the dollar. Yesterday, the markets actually finished in high territory, and that's because banks are helping lifting up the markets. Of course, during the pandemic, interest rates were historically low. Now that they are creeping up higher, this is the time when banks can claw back some of their lost earnings, but much to, I would say, the despair of millions of people across the country that are really struggling to pay their bills at the moment.
Right. So, well, count down to 12 for the Bank of England decision. All right. Thank you so much, Juliana.
Thank you, Laddie.
All right. Now, so that's it for the markets, and that's it from London. Thank you so much for watching. That's it on the program today. It was great having you watch us and get all of those business details today. Thank you so much for watching. I'm Laddie Williams. See you tomorrow.